All right, class, then we're going to get started on the couple exercises here. This is the exercise 1610 from the textbook. This is very similar to a problem you'll do in your additional problem set. The title of the problem is 16.6, exercise 16.6 in your additional problem set. But let's get started. Levy Corporation owns a delivery van with its original cost of $36,500. And the accumulated depreciation of $28,000. Okay, so that's going to tell us its book value at the time of the sale here. Determine the amount of gain or loss on the sale of the van under each of the following situations. So let's take situation A first. The van is sold for $10,000 cash. All right, so what I want to do first is I want to make a little column here with debits and credits, and then I'll write the account names next to it over here. So the first thing I usually do when I get into a disposition problem is eliminate the book value of the asset with its historic cost of the asset going first, and then getting rid of its accumulated depreciation second. So that would entail us to do a debit to accumulated depreciation and a credit to the actual asset that we're getting rid of. So in this case, we look at 1610, we're talking about the delivery van. So the original cost was $36,500. Remember, that is a historic cost. So we'll just say van, and we're going to credit the van for $36,500. Okay, so we know that that's going to happen first. And then we're going to go right to the accumulated depreciation for the van. Now, you want to make sure that the accumulated depreciation is given up to that point at the time of sale. And this says at the time of the sale that the accumulated depreciation was $28,000. So determine the amount of the gain or loss under that condition. So we're just going to assume that accumulated depreciation was $28,000. Okay, so if we credit van $36,500 and we debit accumulated depreciation $28,000, I'm sorry, it's $36,500 and $28,000 for the accumulated depreciation of the van, we're at a point where our books have eliminated the delivery van and its depreciation value up to that point in time from our books. Okay, and that's what's actually happening. We're selling the van. All right, so that debit will take care of the credit balance of accumulated depreciation, and this credit to van for $36,500 will get rid of that historic cost of the van from our books. Okay, so now we want to figure out what are we getting for the sale? What are they giving to us? And in this example, they're going to give us $10,000 cash. So I'm going to go right to the debit side. I'm going to say that cash is debited for $10,000. Okay, and this is where we get into the point where we start to look at whether we gained or lost on this particular sale. If I added up this column here, we're at $36,500, and at this one, we're at $38,000. So I know that I am short on the credit side by $1,500. So if it's the credit side, then that means that I'm going to get some income. It's not going to be a loss. It's not going to be a subtraction from equity. It's going to be an addition to equity. So if I have to put an extra $1,500 on the credit side, then that has to be gain on sale. Okay, so the entire transaction would look like this. Okay, we would have the credit to the van for $36,500. We would have the debit to accumulated depreciation for $28,000. We'd have the cash debit for $10,000, and we'd have the gain on sale for $1,500. And that would take care of situation A for exercise 1610.